All right, hey guys, Sam here with you. What are we, Wednesday, January 10th? And I had some members interested in a look at Ripple to Bitcoin. Now, this is a good time to check in on Ripple after this amazing run that we've just seen. But, I'm here on the daily just to put it in perspective. We've been here before, right? So this is the 2017 rip, if you will, but we haven't quite gotten to the highs of 2016. So, it's good to keep things in perspective as to, where we are. Now, to some degree, you could make the case that what we have here is a 1-2. Now, that would be, here, if I take the absolute low here and I go up to my high, that's certainly a deep retracement. I don't think you need to think that way in terms of anything that we might be doing now. Or projecting for new targets. I think what we have here is the classic run-up. We retrace, and then for all intents and purposes, for any swing trading that we're doing here, we're just working from a new low here. It remains to be seen as to whether or not this will end up being a 2, and we're projecting up to 1.618 from the length of this. It's possible. But I don't think we need to really factor that in. This is the new low that we're working from, so I'm going to work off of this low here. But good to get a sense of where we are relative to where it's been. Here's where we hit the market here. That's 2015. So if we back this out now, right? So I'm going to go down to the hourly. Now, I've got this in log scale because of the size of that run. Log scale will just give you better separation and show you the count a little bit more easily. So, as you can see, it's fairly easy to spot here. So we get a 1, 2, 3, 4, 5 into our 1, down for a 2. Now, in log scale, let me show you the difference here. So out of log scale, it looks a little bit different. You just, when you go to log scale, you see that you get a little better separation here. So we can go from 1 to 2. Here's the 3. We go down to 4. That's, as I've shown you guys many, many times, there's that shallow C wave here. So we get that truncated C wave as, in Elliott speaks, how you phrase it. You look at it as a triangle. You get that kind of a thing here. So it's the shallow C wave, but note how we come right to the Vegas wave before we pop up. So here's where the log scale comes into play. So it looks different to you, right? So it doesn't look like, wait a minute, that's not 50%. Well, that's because we're in log scale. So if we make the assumption that this is a completed 5-wave series, let me make this easier to see for you. Let's go to, we'll go there. Okay, so maybe a little easier to see. If we've got a completed 5-wave sequence, right, and this is something that I try and stress to people, members that are just learning, so it's tempting to think, oh, well, wait a minute, I want to jump in as soon as I get the first retracement. But if you complete a 5-wave sequence on the larger degree, all you've done is complete a 1-wave. Right? So we're operating from the premise that this is our new low. Remember, I wicked that off to show you that this is our new starting point. So from an Elliott wave context, all we've done here is put in a 1. Now, I'm proposing that this may well be our 2, when 3, 4, 5 will be much higher, but I'm going to change that degree. I'll do it in yellow, and we would be going up to intermediate. Let's do that. So do you see that, right? So it's hard to, you've got to factor that in with regards to where your next entry is. So we know statistically that the highest probability zone for a wave 2 is between the 50 and the 618. And what do we do right here? Right? See, so no surprise that Ripple's trading technically. Now we get, a little kicker here that we get, so I'm always trying to talk to you about confluence. So we have the combination of a perfect hit on the 50. So likely that's some algo buying there. And that makes sense to us as it relates to an Elliott count, right? So we can have a fair degree of confidence that we have the potential, right? It's not absolute, but we have the potential for a wave 2 to be in here, and that we would anticipate now that we'd move off of that in some sort of a 5-wave structure. Now, if that's a right, so putting it in context, if this is a 1-2, well, the 3 and the 4 and the 5 are going to be much higher. So if we squeeze back in here now, knowing that those are up there, and we start thinking about a wave 3 projection, well, you know, we're likely to do it with subdivision as we complete a third. So we're looking for that subdivision. So it's not likely to go straight up. Okay, so I mean, you know, again, it's crypto, so anything's possible, but that's unlikely. So what's much more, what we can anticipate is that we're going to go up in a 5-wave sequence. So first thing we got to do is carve out a 1 wave, because we got a long way to go to get up to you know, if we're going to stay in a fib and Elliott wave relationship, that third is going to be much higher. So knowing that, we're anticipating that we're going to get subdivision within subdivision. So first thing we got to do is carve out a 1. So if we have a good low here, we're going to do something like this. And of course I'm going to lower that degree. We'll go back to white and we'll go down to something that makes sense. So we'll go to a sub minuet. Okay, so the idea here is that first thing we have to do is get a 1 wave in. Now, you know, I'm just kind of eyeballing this as to where we might see that 1 wave. But we have an algo target here. So here's the buy at the 50. Here's our target up here. I'm going to push this off to the side so it's not in our way. So we have a buy at the 50, which we have you know, that was something we had up in the room this morning. So this was a buy here at the 50. Really, you know, just a, you know, not a complicated trade. You've got everything that you're looking for. You got a completed 5-wave sequence. We get an A, B, C, a 3-wave corrective structure right into the 50, right into a median line. That's not a hard trade to take. Now, the question is, how much risk are you giving it, right? So if you're giving it all the way down to the 65, that may be too much for some. So what I proposed this morning was, hey, if we're operating on the premise that this is our too low, if we're going to come back down and retest it, I'd rather be out. I'd rather take the small loser here, relative. So from a risk reward, that's 9.75 to 1. I'd rather take the small loser and wait and see if I get more confluence below. Maybe I'm headed down here. Nothing says that I couldn't be doing that. That's still just as valid. And if, you know, again, we'd have another hit of the median line. So, you know, this is not a load the boat kind of trade right here. That's one, you know, so we can enter here. And if we get structure that supports that entry as a good 2, if we come off of this in a 5-wave, well, then there's opportunity to add on the next retrace. So the first bite, as I will often tell people, is you know, not your full position into the first entry, because if this is our third, there's going to be plenty of opportunity to add along the way. So that's why, you know, what you're doing here is you're buying the first retracement. Market's coming down. That's always a little bit unnerving to be a buyer, particularly if it's new to you. People seem to be much more comfortable buying when the market's going up, which I would tell you is the absolute wrong thing to do. You know, you buy it when it's going down, you sell it when it's going up. So, you know, if you're uncomfortable with that, because it goes against your instincts, right? So that's what makes trading hard. So the more fearful you are of the trade, higher probability that it's the right thing to do. The easier it looks, as in, oh, this thing's flying higher, I'm just going to jump in, that's almost always the wrong thing to do. Now, you know, there's no absolutes in trading, and there have been many times over the last year in crypto where just buying something going up has paid you. Right? So remember, in a bull market, you know, everyone's a genius. So, you know, keep that in mind. Now, all of that said, and that aside, what can we do as swing traders trying to be precise with our entries? Well, the first thing we have to do is establish a 1 wave to confirm that we've got a good pivot here. Now, it's technical. We're right at the 50. We've got the median line. The pattern plays. We've got a 3-wave correction. But we don't know for sure whether or not that's going to be our low. So that's why, thus, the smaller risk here, but we maintain all the upside here. And that's just the first target, right? So if this is a 1-2, that the 1-6-1-8, which is the high probability zone for a third, is going to be much higher. But this is a reasonable target to have in mind as potentially a first target for, you know, maybe that ends up being the high for the 1 wave coming out of this. Remember, we're in a subdivide. So if I open this up, the first thing we have to get here is a 5-wave sequence to give me a 1 wave, so I can get more confident in this too low. So maybe I have a 1-2 setting up right here now. I mean, remember, it's waves within waves within waves, right? It's the fractal nature of Elliott wave. So we may well have something like this shaping up. Now let me change that color just so it doesn't confuse you. Okay, so there's, if I can get that, pull that down a little bit. Okay, so that wouldn't surprise me. That's reasonable structure. So let's put the, just to make the point, let's put the wave on it. Okay, so first thing we're trying to do is validate and confirm this pivot. How do we do that? Well, the first thing we have to see is we have to see it come out of that in a 5-wave sequence. If it comes out in a 3, and then we start to, so if we get a little 1, 2, up 3 here, and then we roll over, bad sign, because what does that tell us? If we don't, and so if we go here and then we start to come down, the first retrace, this is the one that makes or breaks the trade. If we're operating on the assumption that a 3 is in, then the 4 has to hold. We have to get a higher high. That's the only way we can know, because otherwise the alternative is that we have an ABC. Right? And you don't know until you see what happens at the 4. Do you see that? So we just as likely could have an ABC. You don't know until you see the reaction at the 4 whether or not you're going to complete this as a 5-wave structure, because it's very possible that we just, on a larger degree, we're going to need to go down and correct. So this is your critical pivot right here. That's the decision point. Are we going back down, right? And remember, if we're going to go back down, if that were to be an ABC, we're going to go back down in a 5-wave sequence this way, right? And to complete down here. You don't know. You don't know. Now, why would I be more inclined to be a buyer here? So you can say, well, why don't I just wait and see? Well, that's certainly one possibility. You could wait and see, do we rally here and go up, get a 5-wave sequence? Then I know I've got a 1, or I increase the probability that I've got a 1, and then I wait for that ABC to correct to give me my 2, and my entry is the 2. That's the safer way to play it. No doubt about it. And particularly for people that are new to this kind of trading, that's a very reasonable way to trade it. That's the safer way to go. Confirm the 5-wave, wait for the 3-wave into the 2, and if you do that, what are you getting? You're getting the 3, right? That's the money maker. That's the biggest. Well, doesn't have to be the biggest, but it's often the biggest, right? So the 3rd wave doesn't have to be the longest, just can't be the shortest. So the ideal place to be is the 3rd of the 3rd. That's where you're getting, the compounding effect there. So, but we don't know until we get here what happens. Do we get a higher high, and thus not only a higher high but a higher low? And we don't know until we see the 4. That's the critical pivot. Once we get that, then we reinforce this as the 2 because we've come out in a 1. Now, this can be a diagonal, so keep in mind that it doesn't have to hold the 1, because remember, we can find a leading diagonal in the 1 wave, and it should just be kind of, it makes sense to you intuitively. We're trying to establish a new trend. So we have a battle between bulls and bears here. That's why you get the overlap. Same thing with a dying trend. That's why you find it an ending diagonal in the 5th of the C wave. It's a battle between bulls and bears to reestablish or finish a trend. So here, this could overlap this. So let me take the ABC off of that. So we could have this, and I'll take that off. This 4 can overlap the 1. And then as long as we don't get a lower low and we get a higher high, then we have a 5-wave structure. We have then a leading diagonal. So where does it? So the next trade, of course, if you have that, is to play the 2. So let's say we get this coming out of here. If we get a wave 1 here, well, where's the next trade? Well, again, it's just a matter of playing the probabilities. We're looking for the high probability zone for a 2, which is between the 50 and the 618. But understanding that a 2 can go as deep as the 786. We know that. So it just becomes a question of risk profile and risk tolerance. Do you want to buy a front run on the 50, stop under the 65? That's what I do. But there are times if I really like the trade, I'll give it some more room. Or if I'm going to buy this and I particularly like the trade, but I'm unsure, I'll take half of position here, knowing that it could go deeper. And if it goes down here, so look what happens here. If this is my target up here, so we're going for the 3rd. If I take a buy here, a partial here, there's my risk reward. if I'm a buyer down here, my reward hasn't moved. So I've got more risk reward, but depending on where my stop is now, whether it's here or the prior pivot of the 2, because that would invalidate the count. If we take out the 2 low, then we have a lower low. Invalidates the count. So, there's an opportunity here for an initial entry, can be at the 50. Second entry can be in the golden zone between the 618 and the 65. That's a contender. Stop under the 786. That's what I more typically will do. But, again, it's a function of what's happening in the fourth. What do we see there? Right? So these fourths have been tricky. Do we get a 3 wave? Do we get the shallow C that we're seeing all over crypto? It becomes, to some degree, it's a matter of experience and knowing what to look for and what kind of reaction to expect. Maybe the oscillators can be helpful to you there. If you get some divergence here and we get to 0, then we go back down, then we get divergence in the Elliott oscillator, the Elliott oscillator, that can help you have more confidence here. But remember, if you're a buyer here, your risk reward is excellent. So it's a question of, do you want this one first? So keep in mind that if you're going to buy the 3-4 into the 1, if you're buying this, okay, the risk reward is not as good because you're anticipating that 1 is going to peak here at some point here. So if you're a buyer at the 50, here's your first target for the 1. Do you see that? So that's not bad. That might be 3 to 1, but you got to anticipate that 1 is going to top, and then we're going to finish, and we're going to come down and put in a 2. So if we were to go to algo target right there, then we come in for the 2. Okay, so you got to ask yourself, well, wait a minute. If I'm anticipating I'm going to come back at least to the 50, and I was a buyer here, do I want to give all that back? Now, if you're a swing trader, what I will often suggest, take a partial profit here. If you get from in this case, if we get to the 618, we get to the negative 23. If you get there, take a partial profit. If this thing's going to come back down, we're going to put in the 2, right, which we would be anticipating. You've still got a partial position on. You can add back the other half right here. You've already banked some profit. So now you're adding back here. Now this may be re-entry at your initial entry price. If you bought here, you've got a slight profit. So you're kind of playing with house money because you've already banked some profit. But so why even take that trade? You might be saying, well, why take the 4 to the 5 if I'm anticipating the 2? Because for all we know, that thing just rips and the whole thing gets relabeled. Then this becomes, you might end up going 1, 2, and then this ends up looking like this, right? So you don't know. That's the thing. You don't know. So it may end up doing this. Right? Then you say, whoa, I'm glad I kept some there because this thing's still going. So you might get an extended, you might get a real rip. Look, see how that can happen. Right? So here's the complicated 4. Look, here's the 4, and you say, well, why do I want to trade the 4 to the 5 knowing that I'm going to come back to the 50%? Well, if you bought it here off the Vegas wave in the front run because we had this shallow, this ABC, the triangle, if you bought it there, well, you don't want to ride it all the way back down here. But here to here, that's a good looking trade. You see that? So it's a matter of that's the whole benefit of Elliott wave. If you come up here, if you get 4 to 5, we don't want to ride it all the way back down for the 2. It's particularly if this completes in a 5-wave sequence, bank it. Now wait, because now you know where the market is going. Now you have a reasonable expectation. You can say, okay, I got a 5-wave sequence. I'm going to bank some profit here, and I'm going to just put this on my watch list and wait till it gets to the 50 because I've completed my 5-wave structure of my 1. Do you see that? So why would there'd be no reason if you bought it here and you got the move up for the 5, why would you hold it all the way back down here to go underwater here waiting for the 50? No, you bank it here. You bank it. You've completed the 5th. You're now anticipating the 50% retracement. And what does Ripple do? Right to the 50. Right? So, so the reason to take the 4 to the 5 is that you don't know how far that thing's going to go. I hope that makes sense. You never know. It's always a matter of probabilities. And, like this could have kept going. So we look down here and we say, well, did we have some divergence down here to help identify that pivot? Well, yeah, we did. So take note here. So here's the 3. If I draw this, here's the 3. Okay, here's the 3, the peak of the oscillator. Here's the 5 up here. So I've got higher prices, but I don't have that strength in the oscillator, helping me identify. So here's the classic Elliott oscillator play. Here's the 1, right, smaller. We go higher here for the 3rd, so we get a new high in the oscillator. We come back to 0 to help us identify the 4th. It goes back up again. We get higher highs, but we do not get higher highs in the oscillator, implying weakness, telling us that likely I've completed a 5-wave structure, and now's the time to be taking some profit. Or if you were trailing with a stop, tighten up your stop, because odds are that you're likely to roll over there. You see, and we have divergence here as well. Look here. Look if I can get it to draw in there. Yeah, there we go. So higher prices, divergence in the RSI and the oscillator, the Elliott oscillators. Perfect, perfect. And then volume starts to go negative. So it's profit taking. Nothing more. You know, not surprising. Not radically complex. You know, pretty straightforward. So this buy here that we did today off of the 50, you know, just a standard, you know, 5-wave. We wait for the 50. You buy it there. Stop. You know, we didn't give it all the way down here, so we did not a back the truck up kind of trade. It's the first bite at it. So because the next potential add is at the 4th. So then we have the entry here at the low. If you catch this, right, and there are many times, you know, you might end up just getting pumped out and stopped out. But look at the risk, right? So it's modest. It's not going to hurt you. It's not going to, well, you know, it depends on, you know, your account size and, you know, what kind of risk tolerance you have. But, you know, as I look at that, that's just a jab. That's not going to blow my account up. If I buy it here off of this good structure, this stop here, it's not going to kill me. Of course, I don't want to be stopped out. I like to catch the turn, but you know, if it does, I'll reevaluate. Maybe we're going to the 618, and I'll pull the trigger again down here. Again, it's structure, pattern, price, the confluence of all of that coming together. Say, okay, I've got reasonable statistical probability here that I've got a good entry for a second wave. Right. So hope that makes sense. Oh, I went long here. There's 21 minutes. Okay, I'm going to wrap it there on that one.